It's been a busy week for commentary from top names inside the Federal Reserve, and that commentary continues today. Yahoo Finance Fed correspondent Jen Schonberger joins us. Jen, take it away.
Hey there, Ryan. Good morning to you. Fed Governor Chris Waller, in a speech this morning, says the Federal Reserve has not made enough progress on inflation based on the latest data, and that the Fed's job is not done. Speaking at a conference in San Antonio, Texas, Waller said, quote, "Financial conditions have not significantly tightened. The labor market continues to be strong and quite tight, and inflation is far above target, so monetary policy needs to be tightened further." How much more interest rates need to be raised, says Waller, depends on inflation data and the extent to which credit conditions tighten. Waller wasn't encouraged much by the latest inflation reading based on the Consumer Price Index, noting that core inflation did not show much improvement. On credit conditions, he says it's unclear at this point how much stress in the banking system following the failures of Silicon Valley Bank and Signature Bank will dampen economic growth. But he says all else equal, a significant tightening in credit conditions could eliminate the need for further policy tightening. Guys?
Jen, while we've got you, what were some of your takeaways overall from this week? I mean, we got a lot of Fed speak. You yourself spoke to the New York Fed President Williams.
Yeah, hey there, Brad. That's right. Two general takeaways, and you heard it there from Waller, which is that inflation remains much too high and that the Fed has more work to do. In an exclusive interview, speaking with the New York Fed President John Williams earlier this week on Tuesday, he says that the Fed has more work to do in bringing inflation down because of a strong job market. Take a listen.
So we're seeing signs of inflation slowing, but inflation is still very high. And I would just mention that, some of this core services inflation, excluding housing, that hasn't budged yet. So still got our work cut out for us to get inflation back to 2%.
And CPI inflation has been pretty sticky as Fed officials view it. San Francisco Fed President Mary Daly made such comments, saying that even though the headline number is moving in the right direction, core still remains elevated and inconsistent with a level of price stability. Now, the second theme this week, Fed officials are watching credit conditions closely, but they don't see many signs yet that it's really tightened substantially and is impacting the economy. Williams told me that he hasn't seen any impact on consumer or business spending or other parts of the economy, though it's still early innings and he is watching that quite closely. Now, we also heard similar messages from Waller as well as San Francisco's Fed's Mary Daly. And the new kid on the block we heard from this week, Chicago Fed President Austin Goolsbee, striking a more cautious tone, looking at these credit conditions as perhaps a greater risk than inflation right now, sending the message that perhaps the Fed needs to move a bit more cautiously in light of all this uncertainty. Guys?
Yahoo Finance's own Jen Schonberger. It's like just a few days ago you were up here in New York City. Now you're back on the telly.
Keep crushing it, Jen. Keep crushing it.
Thanks so much, Jennifer. We appreciate it.